Hello guys, it's Alpha Blue and you're welcome back to my YouTube channel. How you guys doing? Hope you guys are doing good. Please, if you're new to this channel, kindly like and subscribe if you find any of this content useful. You can also turn on the notification bell so you get notified anytime I post a new video. So guys, in today's video we're going to be talking about the best boom and crash strategy that you can use and trade boom and crash to make a lot of money with. And this strategy is by far the best strategy that I have personally used to trade boom and crash, and I would love to share this strategy with you guys. So before we jump into that, let me quickly show you guys my Telegram channel. This is my Telegram channel, Alpha Blue FX. You can check the description below for the link to join the channel. This is where I drop all the trades I take. I also analyze these trades, show you guys the reason why I'm entering these trades, and then you guys are gonna get a lot of useful content, useful educational content, and also signals to take all these trades alongside with me, so you guys can join the channel. Let's make money together. So having said that, let's head to the chart and talk about this strategy. So guys, in this boom and crash strategy I'm about to unveil to you guys, I have actually bought a lot of strategies from different people, and some of these strategies are indicator based strategy where you have to wait for this moving average to cross this one, Bollinger Bands to cross, and stochastics to be overbought or oversold and all of that. And all those strategies, some of them were a bit helpful, some were trash, but then over the years, from my experience, I got to discover that this strategy I'm about to share to you guys is by far better than all these other strategies that I have used. And I know a lot of you guys will be wondering what this strategy is. You may be thinking it's some form of sophisticated indicator or EA-based strategy, but it's actually none of all that. And I think, as a matter of fact, I'm going to shock you guys with this strategy. So what's this strategy? This strategy is simply based on support and resistance. Yeah, you heard me right. Support and resistance, guys. That's just what this strategy is all about. And this strategy now, I don't use any indicators, I don't use anything. It's purely based on price action, just your naked charts and then your knowledge of price action. So in this support and resistance trading system, I actually trade just support and resistance, and then I also incorporate supply and demand, and also sometimes I add trend lines to just give me my trades more confidence, So this trading strategy is actually simply based on support and resistance. That's price action. So if you're new to trading, or if you're a beginner and you don't know what price action is, you don't know what support and resistance is, I would advise that you check online. You can just Google or search on YouTube what support and resistance is, and there are a lot of videos that you can watch, and then you will learn and understand what it is. And if you watch my previous video where I talked about why you should be trading boom and crash, or how boom and crash is going to make you rich, in that video I actually made mention of how boom and crash is one of the indices that respects support and resistance the most. Like, from my experience of trading, I've discovered that boom and crash, it respects support and resistance like crazy, like no other pair that I have seen. So having known that now, I later now discovered that trading just support and resistance, just your knowledge of price action, is actually enough to make you very profitable in trading boom and crash. Now I understand that many people use indicators. Some pro traders, they use indicators and a lot of other stuffs. You see their chart is always filled with indicators, and they use it to trade boom and crash, and some of them are actually very profitable. Of course, it's possible that you can make a lot of money using indicators. I don't like downplay indicators. I don't say indicators don't work, but then one thing I need to tell you guys is, if you're a beginner, and in fact I'm going to do a video where I explain, in my opinion, whether indicators are useful or not. I will explain why you should or you shouldn't use indicators. So the thing is, if you're a beginner, you don't have I feel you don't have any business with indicators. you should not be bothering yourself with indicators. Why? Because you need to understand price action before you should think of using indicators, because price action, that's the main, like, is the backbone, is the like main reason why price moves. You need to understand, why is price buying now, why is price selling now, why is this price pushing away from here with so much force and momentum. So you need to actually understand what causes price to move. You need to understand that before you can now use indicators. Most pros that use indicators and use it properly, they have actually learned price action. They just use indicators like as more confluence, more confirmations to their trades. But as a beginner, you don't understand price action yet. Then you jump in to a trading strategy. You buy a trading strategy from a pro guy, a guru, a trading guru, and then you're just losing money. I'm sorry to tell you, you're going to lose your money. You're going to lose a lot of money. I started trading with just indicator based trading. That was my first like learning period. It was with indicators, and then I was losing money because I didn't understand what was making price move. I didn't understand what was making price go up or down. I was just waiting for moving average to cross, for 10 moving average to cross 20 moving average. I was waiting for Bollinger Bands. I was waiting for my stochastics to get over but then I sell. And all of those things, they were not working for me, because I will lose a trade and I don't still understand why I was losing that trade until I learned uh, price action, until I learned support and resistance, chart patterns, candlestick patterns, and all of those things. And I now got a better picture of the market. And then from then, since then, I right now I don't really need to put up a stochastic. I don't really need to put up the stochastics or the RSI for me to know whether this market right now is overbought or oversold. From just looking at the candlesticks, I already know all of that. So right now I don't really need to put up all those things on my chart for me to understand what is going on in the market. So I will highly recommend that if you're a beginner, you don't have any business with indicators, you don't really have any business with indicators, go look for price action videos and learn. Go look for price action videos and learn the basic, learn the basics. Price action is the core, it's like the foundation, it's like the skeletal system that every other thing works plays on. Whenever your indicators fail, it's price action that influence that, it's price action that caused that. So in this strategy now, I will show you guys step by step how you can effectively use support and resistance to trade boom and crash and make a lot of money from it. So in this strategy now, what I do personally is I look for support and resistance levels. I also incorporate supply and demand. Then I also sometimes I use trend lines to add more confidence to the trade I'm taking. So three things basically: support and resistance. Then I also incorporate supply and demand. Then I now also use trend lines from time to time. So now let's go straight to it. Now in this strategy, let's say you wake up in the morning and you are looking at you open your MT5 to analyze your pairs, and you're a boom and crash trader just like me. Now this is my pairs. Let's say you open crash 1000. The first thing you're going to do is to identify your levels of support and resistance and draw out those levels. Identify your levels of support and resistance and draw out those levels. Now if you look at crash 1000 here, market right now is currently approaching this level of resistance that I've drawn. If you see my chart, these two levels, these gray levels that I drew out, they're actually levels of support and resistance. Let me show you guys. So here I was acting as a level of resistance. Market broke, tried to go back up, it failed, came all the way down to here, went back up again, failed, came down, went back up and came down. So as you can see, this is a level of resistance here. It's a level of resistance, and here was acting as a level of support. So that's why I drew it all the way here. Now if you let me clear this. Now if you look at this place, this was our first level of support. Price broke it here, Then when price try to go back up, you can see a lot of rejection wicks around this area. You can see a lot of rejection wicks. That's to show you that the market was trying to go back up, but then sellers in the market were rejecting that price and pushing it all the way down. So that's why we can see a lot of rejection wicks. You can see a lot of rejection wicks. Let me zoom in. You can see a lot of rejection wicks at this area of our support, initial support, that is going to turn to resistance right now. So you can see a lot of rejection wicks at this area, a lot of wicks. So sellers rejected price and then pushed it all the way down. So you can see that this our level of support has now turned to a level of resistance. Sorry if you're a beginner and you don't really understand what I'm saying, but then I would recommend that you just check up videos on support and resistance, and this is going to become very clear to you. So now, if you are able to identify your levels of support and resistance, you mark them out. You draw your levels of support and resistance. Let's go back in price. You can see at this zone I was able to also identify another level of resistance, and price sold off so hard from this level all the way down. So you just open your chart, mark out your level of support and resistance, just as I did now on this crash 1k we're looking at. So after you've marked out your level of support and resistance, the next thing you're going to do is to wait for price to get to those levels. Wait for price to get to these levels. Now this morning I woke up and I saw that price was buying. Seriously, price was buying. Then it broke this level of resistance. You know, this is the level of resistance. Now price was buying. I drew this level. I extended the gray level to the right. I extended it to the right. So price got here. I was waiting to see what price will do, but it didn't respect the level of resistance. It broke it all the way, and I still extended here to the right because that's another level of resistance that we can expect or anticipate that price will respect. So now once you draw out these levels, you wait and see how price reacts to those levels. Whenever price gets to those levels, you wait and see what price does. If you see that price begins to respect that level, you begin to see rejection wicks. You begin to see price rejecting at that level, just like how it happened here. All these many rejection wicks, you begin to see that price is rejecting. What you do is to wait. You now wait for your next sign of confirmation. You want to see that there is enough supply or demand on that level, depending on which level it is. It depending on whether it's a resistant level or a support level. In this case, we are looking at a resistant level, which is this place. In this case, we are looking at a resistant level, which is here. So we are going to wait to see whether there's enough supply or demand in whichever level we're looking at. So in this case, we're waiting to see if there's a lot of supply. Now, what is supply and demand that I incorporate in this trading strategy? Through my journey learning forex, when I was learning, I was just reading a lot of stuff and all that. You hear a lot of definitions, a lot of grammar, trying to explain all these concepts. But right now, I don't want to do that because I discovered most of all those things kind of confused me. The most important thing is that you understand the concept behind all these theories, because every now and then you get to hear a new YouTuber giving his own language, his own grammar, his own definition of all these terms: support and resistance, supply and demand, this and that. They are always inventing new names to all of it. But then you just understand the concept and forget about the big grammar and all of that. So in trying to make you understand what supply and demand is, I'll simply put it as this: supply is an area in the market where you find a lot of sellers, while demand is an area in the market where you find a lot of buyers. Just use this. Just that's just it. That's just the basic concept about it. No jargons, no lingua franca. It's just this, guys. Supply. Use S to remember. S for supply, S for sell. So supply is an area in the market where you find a lot of sellers, while demand is an area in the market where you find a lot of buyers. Now, You use the previous chart history to determine these areas, and it's quite a little bit related to support and resistance, only that it's not in every case whereby a level of resistance will have a like will stand as a level of supply. You understand? Like in this case now, let me show you guys. Like in this case now, this was our resistant level. You understand? But there was no supply. What does that mean? There was not enough sellers at this level of resistance to push price down. So there was not enough supply at that level. So this place now, you can't call it a level of supply right now, because nothing happened there. So here now can only sorry guys, I had to just quickly set something up. So as I was saying, in this level right now, you can't call this level a level of supply, because there were not enough sellers at this zone, so it didn't hold. If only you saw that sellers were stepping in and market was pushing down, then you can see, okay, there's enough supply in this area for me to consider selling. But if nothing happens, then it didn't hold. So now market is trying to get to this level right now. So you wait to see that there's enough supply, there's enough sellers at that level before you begin to get ready to make your decision to sell or not. I personally, I don't just trade off making like once the market spikes or crashes once, I close my profits. No, I actually trade from like level to level, from zones to zones. So now I wait for the price to get to this zone and then see how it reacts to this level of resistance. Then I wait for the indication of sellers, which is supply. I wait to see that there are enough sellers in the market that are beginning to push the price down. So once I begin to see rejection wicks, I begin to see spikes coming crashing down, and I now begin to understand that, okay, there's presence of sellers at this level, so there's a possibility of me having an entry. There's a possibility of me getting to see price crash all the way back to this level down here. So that's it. So I have to wait and see whether there's supply, whether there's sellers in the market. So if I see that there's supply, I see that sellers are trying to push price back down, and I'm going to do that, notice that by seeing that there's rejection wicks, price is beginning to shift, showing rejection wicks at this level. So once I see that, the next thing I do is to go down to lower time frames, like 15 minutes or 5 minutes. Let's go to 15 minutes time frame. So here's the 15 minutes time frame. Here's the 15 minute time frame. I'll wait to see. As you can see on the 15-minute time frame, the market is already crashing. You begin to see some red candles. That's a good sign showing us that market may crash all the way down. That's a good sign. So I'll wait to see that supply is gradually stepping in. The market is beginning to react in such a way that it wants to crash. The buyers are losing steam and more sellers are coming in. So once I see this, the next thing that I wait for to see is a change in market structure, a break in market structure. I will not just sell off immediately I begin to see that market is spiking down. If you go to 1 minute, you see that there has been a lot of little spikes around, because you can see the market is beginning to spike down, crash down. But this is not yet enough. You have to still wait, go to 15 minutes and see that there's break in market structure. Now on the 15-minute time frame, you see that this is the low, the recent low. So I would love to see price crash and break market structure. Give me a lower low around here. Once I see that price has broken this low and has formed a new low, then I'll begin to understand that, okay, there is beginning to be a shift in this direction, the direction of the market, because the structure has broken. Because as you can see, market has just been buying all the way up, giving you a series of lows and higher lows and higher highs. So I want to see this change. I want to see that the market has reached a level of resistance. There's supply in the market. Sellers are beginning to step in and push the market down. And then I want to also see that market is beginning to break structure. Structure is beginning to shift. It's going to give me lower lows. Then I'll now begin to get ready to enter. I'll begin to get ready to enter. Now, after I have seen a break in structure, what am I going to do? Let's go to 15 minutes. Now, 15 minutes, you can see that this was like the previous low. Let me zoom. This is a 15-minute time frame. You can see that this is the previous low that was formed. Now, if I see that price breaks this low and crashes down here, the next thing I'm going to wait for to see is on the bigger time frames, what is happening there. You go back to the bigger time frames. I would love to see that on the bigger time frames, I'm seeing a lot of red candles that are engulfing the previous candles. If I see, like, take for instance in this place right now, take for instance here on this level of resistance, as you can see there are 2 wicks right there, or 3 in fact. Then the next candle we have is a bearish engulfing candle, a red candle that covered the previous little candle. Then if I see this now, if you go to the lower time frames, you will see that there has actually been a break in market structure. Let's go to the lower time frames. Let's mark this area. Let's mark this area. Let's mark this area. Now, this area that I've marked, let's go to 15 minutes. Now, this is the area. As you can see, this was the low. This was the low here. This was the low. Price broke it and came all the way here before going back, giving like a retest. Then it broke all the way down. So what you can do is, once you see that price has formed a new low, then you go to higher time frames and see that we are getting like a engulfing candle that is engulfing the current, a red candle that is showing engulfing, that means it's showing strength of sellers. That means there are more sellers in the market. Then you can either enter the market or you wait for a little retracement and enter. Now, in this strategy, the entry methods are going to be two. You can enter aggressively immediately you see a break in structure, or you wait for the market to retrace back a bit, then you enter. Or you wait for the market to retrace back a bit, then you enter. Now, if you wait for the market to retrace back a bit, you enter and you can find a good SL. You can place your SL above the wicks where I just drew this line. You can place your SL there, and then you put your TP below. That's, you look for the next level of support and use as your TP. So you can do that, or you wait for, or you just enter as you see a break in structure. The problem with entering as you see a break in structure is that your SL is going to be wider because you didn't wait for market to retrace. But then most of the times, if you're waiting for, sometimes if you're waiting for the market to retrace, you may not get an entry because the market may just zoom off and leave you. Now take for example this place right now. As you can see, there was a break of structure here, but there was no retracement back up before we got a downtrend. It just broke down all the way. So sometimes if you're waiting for like a retracement, you may miss the entry. So the best thing sometimes is just, as you see a break of structure in the lower time frame, and this break of structure now, you go back to the higher time frame, you're seeing an engulfing candle, a bearish engulfing candle for a scenario of sell. You just enter and put your stop loss. You can put your stop loss above the wicks area like this. This is where your stop loss is going to be. So that is pretty much everything about this strategy. So I'm going to give a recap and then tell us exactly step by step what to look out for and what to enter, what to use to enter the market, where to place your stop loss, where to place your take profit, and then how to wait for everything to play out. So guys, for the recap, um once you open your chart, you open your boom or crash, the first thing you're gonna do is to establish your levels of support and resistance. So draw out your levels of support and resistance, just as I've done here. Draw out your levels of support and resistance. Then the next thing you're going to do is to wait for price to get to these levels. Wait for price to get to these levels. Once price gets to this level, you now wait and see how price reacts to these levels. Wait and see how price reacts to these levels. If you begin to see price reacting, like you begin to see little crashes, little spikes, price giving you rejection wicks, like how you can see over here and over here. If you begin to see all these rejection wicks, what it means is that there's beginning to be some shift of momentum at that level. It means that sellers or buyers, whichever level it is, depending on if it's a resistance or support, if it's a resistance, it means that sellers are beginning to step it. That means that level is beginning to have more and more supply. So you now wait to see that there's more and more of these wicks. Then the next thing you're going to do is to go to your lower time frame, like your 5 minutes. Go to the 5 minute time frame, wait and see that price has taken out or broken structure. So this is the low, a significant low on 5 minutes. Once we see this price crash and breaks this structure, so we're sure we know that market is beginning to change. So we're probably gonna see like more sell momentum. So once you begin to see that there's a break in structure like this in on the lower time frames, you can go back to the higher time frames, then check to see if you have an engulfing candle, that's a bearish engulfing candle at that level or not. If you have a bearish engulfing candle, the stronger, the higher the probability that that market is going to sell off that level. So once you see your breaking structure, you see your engulfing candles, your bearish engulfing or bullish engulfing for a buy setup, the next thing you're going to do is to place your trade. Use proper risk management. Place your trade. Put your stop loss, your stop loss above the wicks. You can use for in a case of this level here. If price gets to this level and begins to give us wicks, what you can do is to put your stop loss above the level, above the level, up high above the wicks. Give it room. Give it room so you don't get stopped out and market still crashes. So that's what you're going to do. So once you place your stop loss, like for example, if we get an entry here, what I'm going to do, if we get an entry on this pair right now, I'll show you guys where I'm going to put my TP. I'll put my stop loss here, and I'm going to put my TP here. TP is going to be there because these are the next levels of this is going to be the like a level of support where price can react to. So this is where I want to put my TP. This is where I want to put my TP. I can put TP1 here and put TP2 all the way down here because this is also a significant level of support. So that's how you can place your TP and your SL. So that's just it, guys. It's just as simple as that. Keep it simple. If you're a beginner, there's no need of bombarding your charts with a lot of indicators. Try out supply and demand, try out support and resistance. This simple strategy is just trading only support and resistance can change your trading game. Mark out your levels, be patient enough to wait and see how price reacts to these levels. Then you place your trade and put your stop loss high above the wicks. Give it enough room to play out and just relax and wait and see what price does. So that's just it, guys. If you keep it simple, the better for you. The lesser the confirmations, the lesser the not the confirmations now, the lesser the things you have to watch out for in able to get your entries, the better for you. The better for you. And if you try this for some weeks and you find out that it works for you, you have more faith in the strategy and you're going to trade it and make a lot of money. And just to give a little advice to the newbies out there, the thing is, the lesser pairs you trade at the moment, the better for you. It gives you more concentration. It gives you more uh it gives you more time for you to monitor your trades properly. Most of the pro traders out there, talking of people like Banks, people like Daniel Savage, Fundamental People. Those guys don't trade too many things. They don't trade too many things. There are only few pro traders out there that I know that trade a lot of currencies, a lot of pairs at the moment. The thing is, once you're able to find a very nice setup, just one setup is enough to make you a lot of money for the day. Just right now, I don't take more than two setups in a day. Once I find two setups, that's all. I stick to those setups, patiently wait for price to get to those places, my areas, and then wait to see how price reacts, then take my positions. So on a very good setup, you can make a lot of money. You just leverage on that setup, and then you milk it all the way down. It's just as simple as that. But the more you chase different setups, you can make open a position on this one, open a position on 5 other setups, and then maybe you make profit on one, and then you make losses in 2 or 3, you break even in one, and at the end of the day, you're still in the same place. But then when you find 1 or 2 setups, patiently wait for it to play out. You observe it, you're going to monitor it, and you understand how that setup is behaving. You understand how price is changing momentum, the shift in momentum, and you'll be able to have a lot of confidence to trade that setup properly and open as many positions as your account can handle, and maximize uh, the the profit you can make from that setup. So that's actually one thing that you can do that can change your trading game. So with this strategy, I hope that this is going to help you guys improve your trading. It's going to help you guys make more money in the market. Always remember, keep it simple, guys. Keep it simple, don't complicate things. So in my next videos, I'm going to be talking more about how you can use different techniques in your entries, how you can manage risks in trading boom and crash properly. And I'm also going to be sharing a lot of uh of hacks or a lot of secrets and how you can trade boom and crash and make a lot of money from. So thanks guys, and God bless you.